The Canadian government has done it again, introducing new rules to real estate in the hopes that it'll improve affordability. This time around, they decided to dabble with mortgages, hoping to help first-time home buyers achieve their goal of buying their first home. But is it really going to work? In this video, I'm going to break that down. One of the major changes they've made is by increasing the cap on the amortization period for first-time buyers from 25 to 30 years. Now, typically, the only people who would be offered this longer amortization would be anybody who's putting down more than 20% as a down payment. But obviously, first-time home buyers don't have that kind of capital. So for first-time buyers, now they're able to push that mortgage up to 30 years, meaning they have a longer time to pay off that loan and likely will lower their monthly payments. However, that will come at a cost, because with a longer amortization period, it will also mean a higher amount of interest paid. For example, looking at a 25-year mortgage on a $500K property with a minimum down payment of $25K, you're looking at a payment of just under $2,700 a month. And the interest paid on the total amortization period is about $332K, which is well over half of the amount you're borrowing in the first place. If you were to stretch out that mortgage for 30 years, you would be paying just over $2,400 a month, which is a slight savings, but the total interest paid would increase by almost $100,000. The buyers who will truly benefit from this are the buyers who are looking in the higher price points, because if you look at somebody who's buying a property for $1 million and putting a minimum down payment of $75K for a period of 25 years, their mortgage payment is going to go from $5,200 a month to just under $4,800 a month if they stretched it out another 5 years. However, you have to keep in mind that the amount of interest paid will increase about $150K. You also have to take into account that because you're not putting 20% down, you're going to be subject to mortgage insurance. And mortgage insurance varies based on the amount that you've borrowed, but it adds up and it's an additional cost. So the amount you're saving on a monthly basis might be completely voided by this extra mortgage insurance. Out of all the changes, I think this new rule is going to make the most impact, and that is that they increased the insurance mortgage caps from $1 million to $1.5 million. That means for the first time ever, you'll be able to put down less than 20% on properties that range from $1 to $1.5 million, which for at least the people I've worked with, I know that's going to make the biggest difference. These days, you can't buy a detached home in the Lower Mainland for less than $1 million. And these new rules had to be changed at some point. Because, let's be honest, the majority of people don't have 20%, which is $200,000, to put down on a $1 million home. But with this new rule change, people who are buying $1 million homes as their first home are going to be able to put down $75,000, which is about $125K difference. Keep in mind, though, you will still have to qualify for a $925,000 mortgage with your current income, which is also difficult. It's very uncommon that a first-time homebuyer will be purchasing a home closer to $1.5 million. However, if they do, they'll be saving almost $175K, because with this new rule, they'll only be required to put down $125K instead of the previous 20%, which would equal $300,000. At the end of the day, these new rules will surely help some first-time home buyers get into their first home, but it's really just a band-aid resolution, because as we continue to have lower supply and higher demand, real estate prices will gradually climb, and in the next decade, I'm sure we'll have to revise these rules. I think that there definitely should be an update for first-time home buyers looking in the $600,000 to $700,000 range, where they can put down like 5%. That'll make a bigger difference, because the majority of first-time home buyers aren't buying a $1 million property. So that's it for this one. If you have any questions, comment down below or reach out to me directly. And if you want to see more videos like this, make sure you subscribe and follow me, because I make videos like this sometimes. Catch you on the next one. Take care.